Okay, guys, welcome to another geopolitical analysis video. It's been a while, but we were waiting for the movements that somewhat were predicted accurately from this channel. And today we're gonna jump into a little bit of information about the FOMC that took place. Jerome Powell leading that meeting, some of the discussions, the reaction in Wall Street, but also let's look at the dollar. Let's look at the interest rates. Let's look where we're heading uh, in terms of the risk assets and some of the momentum that seems to have died off a bit, given what's happening in the Middle East and some of the political tensions. But overall, we're heading into a summer. Uh, it might be one of those doldrums where unexpected moves will come about. Although our conviction is still there that until the end of the year, we have much higher to go before a major correction. So let's jump into the dollar. I told you last month that we must see a bit of a reaction here after this massive sell off before we go even higher below 100. I was talking about 102, 105. Well, it hit 102 almost and then touched 107, reacted a little bit. Now, this is a downtrend. Although we're finding some support here, I don't believe that this will hold because this is a point here of no return. If we break a little bit lower, there's just no returning back until several months in. So I do believe in the next 3-6 months, we should see the dollar test these numbers here, 89, 88. So keep that in mind, 3 to 6 months, because some people are saying that I'm not really keen on the timeline, okay? There are many ways you can have a projection, an accurate projection here. You can measure this move here. You can measure these red candles, and then you can add a measure move down, much like we've seen in the dollar in other months. So, the pattern here overall is bearish. Um, a lot of people want to talk about higher prices in an environment where the interest rates are expected to drop. The dollar isn't, there's no reason for the dollar to go up, okay? We're entering into a deflationary period. Inflation has been dropping. There's no such thing as inflation anymore. Inflation means a constant increase of prices. We're not seeing that anymore. If anything, we're seeing a pause, if not dropping in some cases. And if we look at the interest rates, the 10 year over here has been very interesting because it has made a lot of knee-jerk movements because of what happened in the Middle East. And we know that any type of inflationary story, any type of inflationary narrative can actually move the needle a little bit. And we're seeing we're seeing that a lot of people and investors, companies, governments are looking to park their money elsewhere, given the whole fiscal problem that the U.S. has with the trade deficits, but also the spending, the expenditures that seem to have no end. And I like to say, Lynn Alden, and quote her, that this train is not stopping. It will not stop. It's going to be a total disaster, right? Governments need to keep on spending, and when interest rates are much higher than premiums, you understand that it's just a never-ending debt spiral. So Bitcoin makes sense for a lot of governments. We've seen a lot of traction, but the reason why I want to talk about the interest rates is because it just shows you, and we've been talking for months, this lackluster move, this momentum just weighing down. Okay, coming down, you have lower highs, lower lows, and at some point we should see a leg down. I would like to see this. I would like to see this come back and retest the 3.8 in the next 2-3 months. I think it's possible, but if not, we might see it stall here. Now, if we see the stall here until the end of the year, okay, then we might talk about higher prices. I don't think that's realistic given the environment we're in, and people gotta think a little bit more holistically about the economy. The world population has been dropping, will drop in the next 5 to 10 years. Okay, so that is deflationary. AI is deflationary. Technology is deflationary. Technology brings things to a marginal cost basis. So you have to think that um, the environment is not conducive for massive inflationary prices, especially in commodities. That is my take. Things can always shift, you can always change, but we're seeing this right now. We're seeing cracks in the economy in terms of real estate, in terms of consumer spending. One thing I want to talk about the FOMC is that, of course, they held the rate steady, but they discussed about the possible tax cuts later this year. There were some slight revisions of the Fed's forecast for GDP, unemployment, and inflation. Okay, so the numbers are not crazy that are coming in, but essentially, it does show that the Fed is a bit divided in terms of what to do. I think that this is just politics. I think that this is just bureaucracy. You need to show plurality. You can't just have a monotone approach where it's just like we're doing this and nothing else. We need to have plurality in opinions. So I think that's what's happening with the Fed right now. I don't think that the war with Iran and Israel will really cause like a massive spike of inflation. Sure, we've seen some logistical supply cuts and some problems there, some bottleneck, and that is why you see this big move of oil. We talked about how if oil breaks 60, okay, this is your telltale sign that the economy is not doing well, right? Like, sure, we jumped up to the higher 70s, but this is just a reaction, okay? And I've mentioned many times that when you have news driven reaction in prices, it's not stable and it's not going to be long term, okay? So I still think that we can see oil drop much lower than this price here, okay? It might go to the 40s. I think this is where oil drops and then picks up again, okay? Bitcoin had a great move. It retested these prices, made a new high. Now we're seeing a bit of a correction, loss of steam, perfectly normal, okay? I don't think that this is the end. I think we go way higher, but let's wait and see what's going to happen in the next 2-3 months. I do expect September to be relatively hot. I can see in September prices of 120 to 130. Marathon, the miners still consolidating. They had a decent move up, but they're just consolidating right now. I can see Marathon September, October hitting $30. That is my prediction. The markets right now, beautiful. Look at this beautiful buying tail back in April when there was so much panic and turmoil. Same as the Russell here. The Russell needs lower prices. So until we see lower interest rates, we're going to see this consolidation, if not a bit lower. Oil, we touched on oil. I want to touch a little bit on the VIX. The VIX, despite what's going on in the Middle East, didn't really have much of a movement. Okay, $16 to 21. This is a very average move. But if we look at April, for instance, a huge scare with the tariffs and whatnot, look at that. Like, you had a 3x move there. Gold, amazing. Trying to push for higher highs. I told you guys that I think this was the top. 3,500 is the top. I've called it. I think that that's where we're at. TLT is the place to be, guys. If you want to consolidate, if you want to keep on buying bonds, this is the price you want. Like, you don't want to buy something that is expensive. You want to buy something that is dirt cheap and that is hated on. Right now, TLT is kind of hated on. US bonds is hated on. This is the perfect opportunity. Thanks so much for checking in with me. I just want to check in with you. But one of the most important things that I also want to mention is look at this. Look at the money supply. The M2 money supply has been increasing. We're well over the COVID highs of 21.76 trillion. We're over 100 billion of what we were in COVID back in 2022 when the whole interest rate bonanza took place with the increase around the world. So guys, stay tuned. We're not done. Equities are not done. Thank you. Bye for now.